morning, everyone. My name is Paul Huet. I'm joined here by Eric Sprott. It's great to be here this morning with you, Matt. Good to see you. We're going to talk to you a bit about America's gold and silver. And unfortunately, I didn't have the time to go home and get a suit here, so I'm here the day after I was underground. So please excuse my t-shirt, Eric, but I was underground trying to make us some money yesterday. America's Gold and Silver is a silver company in the U.S. For those who don't know, we have an asset in Idaho, the Galena mine, and then we've got an asset in Mexico. And it's a complete turnaround story, very similar to what we have done in the past with other companies like Klondex and Karora. And I'm very happy to be here with Eric, who is our largest shareholder, to talk about silver and our company.
Paul, Eric, lovely to meet you, and thanks for coming on the show. Well, we've got to start with the obvious question: is how do you two know each other?
Well, I guess I bumped across Paul and his name, watching him do things at Klondex and other places. And there was a time that I had a very key position in Karora, a share position, and I thought we needed some more strength on the board, and Paul came to mind, and I asked him if he'd join the board. And he did, and of course that Karora was quite a success story. So we've probably known each other for, well, professionally at least over the last 10 years or so, and I respect his ability to make things happen in mining.
Yeah, so Eric's 100% right. We met about 10 years ago at Klondex, and I was very thrilled to become chairman and CEO of Karora. Eric was the largest shareholder of Karora. As you know, we merged Karora with Westgold last year. It was a complete turnaround story after the Father's Day discovery. So there's a lot of similarities here that exist here with America's Gold and Silver. Eric was the largest owner of he owned 40% of the Galena mine. Now he's a 20% shareholder of America's Gold and Silver, which is a little different, but in a very good situation now that we've taken over, and the mine is turning around rapidly, very quickly.
Paul, what I've got to ask, what's the brief to you with these assets? You've got 4 assets, but you're probably going to focus on 2 of those. So what have you been charged with doing?
Yeah, so look, early on, when Eric owned 40% of Galena, he had called me to become his technical advisor. So I had a bit of an advantage here. I was Eric's technical advisor for a year before I actually did this deal. That was really important for me to understand some of the opportunities we had. Look, and when you start looking at some of the things we can control and some of the things we can't control whether or not the metal's in the ground, we can't control metal prices. But in this case, we did a very deep dive on whether or not the metal's in the ground. We're talking about the Silver Valley here, one of the districts that's been around for 100 years. There's over 150 million ounces of silver here. We're not at 5 million ounces of silver yet. You do the math, that's a lot of years still in front of us, Matt. There's plenty of life in front of us. So for us, we're very excited about where we're going. All we have to do is repeat some of the same things we did at Karora that were successful. And that was, in easy steps, change the management team on site, bring in some new equipment, which just arrived yesterday. I was on site at the mine with a group of people, and that new equipment has arrived. We're pretty excited about that. New equipment, change the mining method. Our neighbors are doing 100% of their mining with long hole mining method. We're doing 0. That's a tremendous opportunity. We did the same thing in Australia, right? So people, equipment, mining method, and in order for the equipment, we need drills, long hole drills. This is gonna be new in our mine. We just did the first drop raise ever here about a week ago, and then a paste fill plant. Once we get those things, and they take a bit of time, and we get those things into play and into the mine, then you're going to see our production start to shape up and lift and increase, just like you saw at Karora. And if you're a believer in silver prices, and we've got probably one of the known experts here in the world, and I'm excited to hear him talk about silver, but I'm a pretty big believer in silver right now at $30. I think it's got nowhere but up to go. We're in a great time in greatest jurisdiction you're going to find on the planet here.
And let's take care of a few kind of housekeeping matters, just so we can again park those up and focus at the matter at hand, which is how do we get the revenues flowing? Which is you raised a bit of money, $50 million, quite easily it seems. Institutions wanted to pile in on that one. Let's talk about the share register, that money, if you don't mind. Where'd it come from?
Yeah, so sorry, Matt. I opened up with the largest shareholder, who is Eric. He owns 20% of the company. We were on day one about 8% institutionally held. Today, which is what, 75, 80 days later, we're almost 60% institutionally held. What a shift in register. And that's very exciting. That means we've got a lot of institutions who believe in what we're doing and support it, and who were in desperate need of a good silver story. This thing has a lot of torque from here. There's a lot of room to grow from this point if you're putting in money at these prices.
You're sitting here at a 450 million market cap. You've doubled in the share price since September of last year. So obviously you were around as an advisor for lots of it, but obviously stepped in as CEO more recently. I'm just interested in that. Why is that change important to you? Because you took a lot longer to do that when you were at Karora, didn't you?
Yeah, well, in this case, most of the people that were Karora shareholders, like Eric, followed us immediately. And we've had, listen, in the last 100 days, we've met with over 112 accounts. It's been a lot of work, a lot of effort, and our story and our message is simple. We're keeping this simple. It's about repeating the success we had at Klondex and Karora, just repeating that same model, not complicating this. People, equipment, mining method, a batch plant, long hole, and it's about becoming more efficient. It's as easy as that. There's no point in trying to complicate a story. It just takes a bit of time to get it done, Matt. It takes time to get it across the finish line. We're talking about a mine that's been around for 100 years here.
Okay, well, Eric, we better bring you in at this point. Look, obviously, bringing someone in with Paul's reputation was important to you. I guess it kind of reflects the kind of mood in the market at the moment that people want to focus in on projects that can deliver near-term revenue. When you've been working with Paul, when you took him on as CEO, what was your brief? What did you think was important for this company?
Well, of course, I'm very happy with the success Paul's had before mining. I know nothing about mining, to be honest with you, but I know he knows how to run a mine, and that's why we have such a symbiotic relationship. The other thing that Paul hasn't spoken to, which I think is probably the most important thing, is what's going to happen to the price of silver and the metals, other base metals. And as you know, I mean, we've gone recently, probably a year ago, we might have been 20, now we're 33 today, after a bit of a check back. I have been in the camp that believes silver has been manipulated for the last 50 years, as was gold manipulated for the last, I guess, 49 years now. And it stopped about a year ago when gold went through 2,000 and immediately went to 3,000. Just like, nobody would have predicted it went that fast. But I think the banks, we always know the banks are the guys that have the short side of the market. They're always 100% of the short side of the market. And then they're finally getting run over, okay? I mean, I hate to think of how they're gonna hide the losses that they must have with a $1,000 move in the price of gold. And the same thing with silver. I mean, the short position is like 800 million ounces, and every year we have a 200 million ounce deficit for 5 years in a row now. I don't know how they do it. And I think they will be run over here, and that the silver price will go to 50. And whenever I think of any silver investment, I already think to myself, okay, what's this going to be worth at $50? And you get some tremendous numbers. I bet you every stock that I would own in the silver area at $50 is probably trading at 1 times the cash flow when it's 50. So fine, we just wait for things to play out, wait for the silver thing to do what it's going to do, and I think we'll have a great investment here.
Okay, well, let's stick with the macro a little bit. Paul, I do want to get back to, if you don't mind, some of the gruesome detail in terms of the operations, but just stick with the silver thing, because a lot of people, perhaps even new to silver, haven't played or dabbled in the silver space. What do you think the drivers are, Eric, currently, which are maybe causing some of the bankers to kind of lose control, as you state? Because it's always been one of those commodities which was produced as a significant part of it, produced as a byproduct, right? There's very few pure plays like you guys are. But what's changed in the market?
What's changed in the market is that the demand for physical metal has changed in the market. So we see these things where, you know, the LBMA loses 72 million ounces of silver in January. Well, that's what we produce in a month in the world. That's just in the LBMA. And Every day now, I'm always shocked that you look at the COMEX, and the COMEX was never a physical market. Hardly any metal ever changed hands. But every day, the open interest, for example, in gold went up 500 ounces yesterday. 500 contracts yesterday, 50,000 ounces. You know, there's like $150 million worth of gold that somebody bought that day, in addition to the huge amount that was already standing for delivery, which I think was 50,000 ounces of gold. So you just keep watching the physicalness of what's going on here, and the paucity of sellers. The volumes have gone way down, unless, of course, there's a raid on, like we have a pretty good raid going on today, and you can always see they just hammer it down. And then, but you know, they don't really have the silver. They don't have the metal to do it, but they got the money to do it. And I think sooner or later, they're going to be caught out on these positions that they have. They're just ginormous by anyone's measurement versus the size of the market. So we just wait.
And tell me, because given we're talking about silver, we've got to talk about Mexico. Obviously, AMLO's off. Claudia Sheinbaum is in. It may be a different environment for miners going forward. Does that, I don't know how you view Mexico maybe opening up for silver miners or not. And what impacts it had on your businesses that you've invested in, whether it be in Mexico or ex-Mexico?
Well, I mean, I'd love to. We have lots of investments in silver deposits in Mexico, lots of them, including Discovery and Chesapeake and these huge ore bodies that haven't got approval yet. And I think they're going to get approval. And I'm not worried about all of a sudden some oversupply of silver. I mean, the shortage is so large, and the outlook for the uses of silver is just incredibly optimistic. I mean, I listened to somebody from McKinsey talking about, you know, how much the demand for solid-state batteries in cars is going to do to these metal markets. I mean, you're talking about 3 and 4 and 5x different in a decade. Well, we don't have any. We probably have had the same production of silver for the last 5 years. 800 million ounces or 812 million ounces every year. So we're going to need silver. I mean, it's going to be desperately needed.
Right, but the winners are going to be the ones who can produce it cheapest, because it will make more margin, hopefully. It's the name of the game, because we can't sit and rely on the silver price to go up and do our job for us. So maybe back to operations, Paul, can we start looking, if you don't mind, at some of the things that you've identified that are quick wins, in terms of those cost savings, that bottom line, and things that perhaps will kind of come in over time, amortize over time?
Look, I'll talk about some quick wins right away. So obviously, putting in a strong team, Matt, that's the best. You're never going to beat that. So that was done on day one. If you look at what, what our neighbors are doing next door, they're doing 100% long hole, Matt, and they're blasting 10,000 ton stopes. I don't know if you can see that picture, but that's a guy here running a jackleg. That's what's all over my arm here. That's what I did for a living for years. We do every blast at the moment. Every one of my blasts right now are 80 to 100 tons, while my neighbors enjoy 10,000 ton blasts each stope. This is something we just did, our first ever drop raise in about 10 years. We just did one, a long hole drop raise. We had a group come in, contracted out, just to show our people, look, this can be done at this mine. Adopting that new mining method, it's critical for us. And it's critical for us to have a hybrid system so that we're doing some of the handheld stuff, but some of the long hole. It's never going to be one mining method only, because some of our ore body is a little flat line, some of it's very steeply dipping. But the moment we start injecting this long hole, and we got 2 new drills coming, we've got the equipment that I talked about earlier. When we start long holing, that changes our costs altogether. So even at $30 an ounce, we make a lot of money in the silver district. So I'm a big believer, like Eric, that silver's going to $50 an ounce, but I'm very happy where it is right now. I know that at these prices, we make a lot of money, and we haven't even touched on some of the byproduct credits that we have. Look, our mine has produced copper, antimony, and gold. We got 7 gram gold in our concentrate. We haven't been paid for the gold, the copper, or the antimony. You start injecting that into it, and you start scalping it off. At the moment, we've got so much infrastructure. We've got 4 shafts, 2 mills. I'm using 1 mill 3 days a week. You talk about what's the low-hanging fruit. Get your mill running 7 days a week like every other mill in the world. Holy snap and turtleheads. Have you ever seen a mine trying to run and they're running the mill 3 days a week? No wonder we're starving here. This thing, it's producing 1.2 to 1.3 million ounces of silver a year. It's got to come up. It has done it before. We just got to get it to there, change the mentality, and we're doing it. Where those quick wins are happening day in, day out. Every day we're underground. Every day I'm underground, the team are underground. We're identifying things and we're changing things in the mine at a very, very fast pace here. The mining method is the number one. And look, we've got some of the best miners you're going to find in the world. You go to Idaho and you see some of our miners. They are extremely good people. We needed to give them different resources, different mining methods, and lead them differently. I would put our team up against anyone, anywhere in the world, and you'll see some extremely talented people. And the same thing applies for Mexico. When you start thinking south of the border, I've got probably the strongest team I've seen in mining in decades in my operations in Mexico. That group in Mexico, we're not changing any of the things we're doing in Mexico. It's more of a repeat what we're doing and getting into the new EC 120 zone. So we start getting paid for some of these byproduct credits, Matt, that we haven't been paid for, the copper, the antimony, the gold. Where's silver going? Is it stopped? I doubt it. There's a deficit, 200 million ounces every year there has been, and it's ongoing for the next 5 years. As Eric was saying, solar power, batteries, artificial intelligence, everything you do requires silver. So
I want to carry on silver a little here. And because, I said, look, and I can use 50 to see what the value would be. My own view is with the gold at 3,000, silver should be at 200. It always traded 15 to 1 to the price of gold. It's mined at 8 to 1, and it's trading at 90 to 1 now. It's just insane, the valuation of silver, because it's controlled and manipulated by about 10 banks, and we all know that. We know that, anybody who studies it. So, but they will end up losing that game, and we're going to go back to a normal ratio of silver to gold.
Okay, yeah, we made this conversation for another time, because I think we've talked in the market a lot about naked shorting and shorting of stocks, and yeah, no accountability by banks for sure. Happy to have that conversation with you separately. But let's assume at some point that dam breaks. You feel $200 is where your head would be at 3,000. Okay.
Yeah, but I'll tell you this: even at $30, I as the new CEO and chairman, I'm not complaining. At $30 an ounce, we get there and we make some really good money. It's about taking a mine that's been around for 100 years and allowing it to do what it has done before. Opening the door, letting our miners make some good money, opening the door for them to make money, and we make money alongside them. So for us, look, this is a win-win situation in a perfect scenario here.
Yeah, I've been through the 2024 numbers, but I think it'd be unfair to kind of judge you on those, because we're talking about a slightly new paradigm here.
Given that I started December 18th, it might be unfair, Matt.
Yeah,
but
I'll let you off. What I do want, though, is a kind of sense of therefore the kind of operating metrics and productivity metrics by which you will judge yourselves going forward. And then, if you don't mind, kind of break down the allocation of capital. You've got a bunch of money now. You've talked about exploration being part of it, but can you kind of break that whole thing down for me?
Yeah, so look, there's no doubt that exploration at both Mexico and Galena are going to be very important. We're going to start seeing numbers this year, exploration between the $3 to $5 million at each asset. So that, remember, last year you're going from zero. So we pushed the envelope to 5. It's going to be dependent on drill platform. So we would actually, our preference is to spend 5 at each, but we have to make sure we have the right drill platforms. Matt, we got to make sure that our areas are ready to drill. So as soon as those are ready to drill, you're going to see us starting to spend money on capital. Where else do we spend money? We need some waste development. We need to advance some waste development so we can stop going through these boom-bust cycles. Our planning has got to be improved. We get these quarters where we get massive spikes in grade. It has to be smoothened out. The only way to do that is to put in some waste development. So do the drilling, put in some waste development. We've got about $7 million allocated for equipment. We've got about $8 million for a new paste plant. In this type of rock, where there are some geotechnical strains, we need to make sure that we're doing things safely for our miners. And underhand cut and fill or cut and fill both work here alongside long hole. So we don't have a paste fill plant at the moment. We have a sand fill. It's very, very different. Getting a paste fill plant like our neighbors are doing, that changes things, and it's about $8 million. We'll start it this year. We'll finish it next year. Because we have 4 shafts, we have 4 of them in a row. To sink a new shaft today would cost, I don't know, $300 to $500 million. That's what it would cost anybody in the world. We have 4 of them. I'm using 1 of them today. And we have been constrained to that 1 shaft to about 650 tons per day. That's ore and waste. This year, we're spending about $7 million to increase the production in that 1 shaft. The number 3 shaft is going to go from approximately 42 tons per hour. That's where we started. 3 months ago, we were doing about 42 tons per hour. We're already at over 60. And the only thing we did was change the people and change timing and change schedules and how we receive stuff. We've gone from 40 to 60, a 30% increase already just by changing the scheduling and by making sure we run the mine instead of someone else running the mine. And our goal is to get over to 110 tons per hour. When you start doing the math, you say, all right, if he's at 110 tons per hour, that's ore and waste. You use 16 hours a day of skipping, which is normal for most mines. You're talking almost 1,800 tons a day. That's every day. We couldn't do 700 tons a day. So we're going from that to here. So there's some big things being done this year. That's one. The copper concentrate that I talked about, Mike Doolin is quite advanced on the metallurgical testing on that. It's just about taking the existing mill. We got those 2 mills I talked about, one 750 tons a day. It's operational. We got to get it to 7 days a week, putting on a scavenger on the back end and starting to collect that concentrate of copper, antimony, gold, and then being paid for it. So we're excited about that. We're going to get a lot of that work done this year, mostly into next year, but that, again, changes everything for us. These are not, when you start thinking about, well, how hard is this? Why wasn't it done before? You quickly find out that Galena was starved for capital. Why was it? I told you at the beginning. They were very focused at Relief Canyon. When a company is focused on one asset and the other ones are neglected, it creates an opportunity. That's why Eric called me. He called me because that was the opportunity. He had a 40% investment in Galena. He's like, I don't know what's going on. I was supposed to put in $20 million. This thing's supposed to be spitting out cash. It's not yet. What's going on? And it's about repeating those same things. This is not rocket science. I'm not trying to reinvent anything. I'm going back to basic principles of mining 101 and following those steps.
Okay, so and also I think this is a perfect time to talk about this. Obviously, Relief Canyon, the company maybe was optimistic. It's wasted a lot of money there. You've got an opportunity ahead of you. So I want to talk about managing expectations around timing. Look, you both know more than anyone else. Setting expectations is going to be really, really important for you. Can you and you haven't given guidance, I get it, and we don't know how many meters you're going to be drilling, etc. That'll come out soon. Can we talk to that? Because I think it's really important that, because you're $400+ million market cap company out of the gate based on expectation, you don't want to get to that point where you can consistently backfilling valuation. So again, what's the pathway forward look for you in terms of timing and deliverables?
Look, everybody, including my board or Eric, asked me that same question. What's guidance this year? What's guidance that's year? And I'm repeating the same thing. Look, this year is a big year for us on a building year. Last year, we did about 1.3 million ounces at Galena. We did about 1 million ounces in Mexico. So call it 2.3 million ounces. We have been saying to all the shareholders, all those institutions who have bought our story, we've been saying, look, at Galena, it's going to be a flat year. We expect it to be flat given all the stuff that we're doing with the people, with the equipment, with the shaft. Those things don't happen overnight. With changing a mining method, all those things that have to occur, we need a bit of time to do it. In Mexico, we'll be into EC 120 by Q3. So in Mexico, we expect to step up from where we were last year. So guidance, surprisingly, will be better than last year. And we'll get on the phone when I put out guidance. I'm not going to give it to you today. I'm not getting ahead of it. I want it to be something that we deliver on. You followed us at Karora. We had 20 quarters in a row over 6 years. We delivered 19 out of 20 quarters. That's not luck. That's about us putting expectations that we know we can meet, putting deliverables that are stretched, You can't tell me they weren't stretched. We broke record after record after record. So every time we broke a new record. So in this case, we're putting in stretched goals as well. We have been working with groups who have known us for a very long time, that trust us at securing this so that we are not diluting our shareholders and protecting that share price.
Okay. I get it. Like you've hit. Look, I want to kind of keep this helicopter level today. It's really kind of introductory conversation about the story to me and to all the people listening, watching, reading about this thing. We'll maybe come back on and get into the weeds a little bit, but in terms of that whole infrastructure and equipment and metallurgy and mine planning and trade-off studies, etc. I get where you're at, and you will come back and tell us all about it coming forward. But just want to be really clear about this kind of valuation thing. Do you think that this thing is fairly valued now? Because you've kind of risen, you've doubled the share price so in a very short period of time, or do you accept, or would you suggest that you've got some work to do and let people judge you on what you do quarter after quarter after quarter?
So look,
going back to Carora days, right?
Yeah, look, people are always going to maybe sit and wait. Those who know us well bought in right away, but we're trading about 0.4, 0.5 times NAV. Find another silver producer that's going to be producing the amount of silver that we're going to be putting out on guidance, Matt, that isn't trading at 1 to 1.5 times NAV or even better. Every silver player out there is fully valued or trading at multiple. There's only, 7, 8 of them? We're one of them that's 80% silver play out there. So we are absolutely undervalued, and I don't think it, I know it, but I put my money where my mouth is. Look at how much stock I own. You can go on SEDI and look at the filings here, and I am in one of those top 5, and I did write some big checks, and I'm very happy I did write those checks because this is the safest place in my life to put this money. This is not a high risk gamble for me. It's the safest safest investment I've ever done. So we are very undervalued. Even though we've doubled, people have not missed this story at all. Not even one bit. We've got a lot of room to go from here as we continue to deliver quarter after quarter after quarter. And you start going from that. Look, last year we were 1.3 and 2 million ounces a year. You go to 3, 4, 5 million ounces a year. The year after, you're above 7. Things start to change really, really quickly. Those companies are valued 1.7 to $2 billion companies. So our valuation has a lot of room to grow. People haven't missed anything yet. Those who haven't seen it, who didn't catch it right away, haven't missed it.
Okay, Eric, one for you. Pure play silver companies last year did awfully well. Some pretty big transactions happened, $1 billion plus type transactions happened last year. Do you feel that this company that you've got here, with the team that you've got here, with the potential that Paul's outlined here, do you feel that this is one of the kind of safer bets for you as well, as Paul seems to be indicating?
Well, as I sit here and listen to Paul and what his expectations are and hopes and expectations, and I know he's done it before, and I think he knows how he's going to do it this time. Yes, I think it's a very safe investment. I mean, a lot of investments I make, Matt, I have 20%. I never have to think about selling because you typically can't sell anyway. All you want to do is have Paul do his job in terms of making the mine more efficient, or the mines more efficient, and hoping that the prices that he receives keep moving up, getting paid for some metals that we've been producing for 20 years that we got nothing for. Pure 100% profit if he can monetize that. So, of course, I think there's all sorts of opportunities here. And as you well know, I mean, there are only about 10 silver stocks around. I mean, it's just shockingly small market. Anybody who thinks they're going to get into the silver market, they're not going to get a lot of money into the silver market. It's way too small. And the whole investment in precious metals by the world financial markets, it would 0.2 of 1%. 0.2. And the number one performing group in the first quarter, and it went up, whatever it was, 25, and then the market goes down 10. So we got a 35-point difference already in a quarter. And people, even if the people don't recognize it, thank God for computers, because the computer tells you what's working. And every day as a PM, you're going to get that sheet there. Oh, precious metals. Oh, precious metals. Nobody has any.
Yesterday was a big day, I guess, for tariffs and so forth. We're talking about precious metals here. Yeah, you can sell it anywhere, but in terms of the process of making it, in terms of cross-border activity, it starts to get complicated, doesn't it, with these new tariffs?
Well, I don't think
What do you think,
making
Paul?
it's going to be a problem.
No, yeah.
And
But, no.
I also believe that because it's equivalent to a currency, it's going to find its way to move around, okay? One way or another. They're going to, and there are, as you know, there are no tariffs on it. They were exempted. So I think there'll be decent free flow and opportunity.
I'm thinking more like, acids if they're required, equipment, concentrates, etc. Stuff moves around a bit in this game, right? And do we have any sense of how it affects us?
At the moment, for us, at least in Mexico and in Idaho, we're not seeing any changes at the moment. Could that change? Potentially. We're very focused and laser focused at making sure, look, we can't control what the tariffs are going to do. We can't do it. We've got a goal here at getting that mine fixed, getting the mine to a tonnage rate to 1,000 tons a day. And that's where we're focused, Matt. So the tariffs are going to do what they're going to do. I'm not ignoring them. I'm very aware of them. At the moment, it isn't impacting my business yet. It could potentially with explosives or steel or other things. We'll deal with it. We got to get our costs down. We got to get our efficiencies up. And when we do that, we'll deal with the rest, Matt.
I'm looking forward to guidance, something like Karora, where I think you laid out, 4 promises, 4 targets. We'll see if you do something similar by which we can judge you. Like I say, gentlemen, that is as a sort of introductory to the story. We like silver. We like pure play silver. This is effectively, we'll call it an efficiency drive rather than a turnaround story. There's a lot to come back from you guys this year, I suspect. So we will follow you closely with great interest. Gentlemen, thank you for your time.
Thank you, Eric.
Okay, Matt. Thank you.
All right. Thanks, Matt.